We saw all paths coming back to the trend line because that's how real estate works. I went back to Q4 of 2022 to go through this case study. We all lived this together, and we had a very different take on where pricing was going to go. So this isn't our first rodeo making predictions, but this was an important inflection point, I would say, for everybody. And what we were able to do is to really calm the noise. So our thought was that we were going to have what we'll call our own sort of soft landing here. And the theory and what we know to be true is it's all about the trend line. Prices in real estate go back to the trend line for your own market. And we have seen this play out with our own investments and the money that we get to manage for all of our clients now 20 years. And so we knew that we were going to get back to the trend line. We saw all paths coming back to the trend line because that's how real estate works. It's a consistent asset, and supply and demand and inflation actually work in your favor to get you back to that trend line. And what informed us in those decisions was looking at the key leading indicators like months of inventory. Months of inventory is an important metric because it's that leading indicator, and it looks at how many homes are for sale in inventory on the market at any point in time. And we look at how many homes sold the previous month. So in essence, it's measuring how many months does it take to exhaust the current inventory in the market. The real thing that we saw is that MOI doubled. MOI went way high in a short period of time. And that was the indicator that there was going to be pain and serious price declines in the Jacksonville real estate market, as well as across the country. That is what we know to be the great financial crisis.
Yeah. So that was the main variable that you were seeing in the difference, right? Like these other leading indicators were happening that the media and people were like freaking out about, but you knew that there was some kind of floor there because in 2006, this MOI number went out of whack. Right now, the MOI number at the end of 2022 was super good. So like you could take some pain, which we endured that pain. We did the higher than average interest rates, and this is what we saw. It looks like a regression to the mean. You predicted that Kiwi green line where you would come back to this mean line as opposed to like going way down below it and then coming back and having to recover.
Exactly. That's exactly right. This regression to the mean is such a core concept of why this asset is so awesome. We can say it follows the trend line. Your home prices are going to get back to that trend line. And most of the time we actually hug the trend line. And when we say hug the trend line, that means reduced variability. That means peace of mind. And then what we also need to realize is that when you hug the trend line, when your prices go along that trend line, what you're getting is your money is growing at about 10 to 12% a year. And so it's doing it consistently. We were right. We were right because of the data, because of the perspective of seeing the market play out in different ways over the last 20 years. And that right there has allowed you all to make really good decisions and continue to add to your portfolio and not be worried about the next crash.